people who had been involved in hard assets and precious metals for a very long time. And since 2020 that we have expanded, we talk about into the audience and even across the street, a larger swath of people have come into this industry over the last couple of years. And I think that to a large degree, many of the people who came in late came in with intentions of making a profit. And look, anytime you make an investment or buy an asset, you expect it to appreciate. And in an environment that we are seeing with massive runaway inflation, with geopolitical problems, war, with political issues, moral and social issues, and all of the things that are all coming together at the same time, one would expect that this would be the environment that precious metals would excel in. And I think that a lot of people have become a little bit disenchanted, perhaps, with the lackluster performance of gold and silver. Now, look, the bottom line is simply this. Is it lackluster? Let's talk about gold for a moment. When you look at all of the major asset classes, you look at like Bitcoin down 35-40% for the year. You look at the FANG stocks, Facebook and Apple, or Amazon, Google, Netflix, they're all down between 30 and 60%. You look at the Dow, the S&P, the NASDAQ, they're all way down. Gold and silver, certainly, and in particular, in this case, gold, it hasn't made anyone wealthy, but it's held its own. And I think in the environment we are about to find ourselves immersed in, he or she who loses least wins. Now, I would also like to say this. Look at the extent to which the government has distorted the economy with inflation, and where asset prices reach astronomical levels, counterintuitively, if you will. I think that gold and silver represent the canary in the mine shaft, and I think there is a concerted effort by the powers that be to not let gold and silver explode higher. Now, I think at some point they're going to have no choice. I think at some point the market is going to do this on its own, and to the best intentions of the central planners who would like to keep the price muted, because what rising gold and silver signal is trouble with the currency, trouble with the economy, trouble with the system, the whole Western system. And I think we're at that moment right now where they're really trying their best to keep the dollar's main challenger, which I look at as gold and silver, muted on the sidelines. Now, we can get into why I think later this conversation, why I think that's going to prove futile. But what I really like to get across is that I think there is a concerted effort to keep gold and silver in a tight trading range. And people are tired of waiting for this breakout that should have already happened. Look, I've been doing this a long time. I'm tired of it too. But I've always said that gold and silver are not an investment, they're wealth. And in a period of time like we're experiencing right now, you need to remind yourself of that. You need to look at all the asset classes, which are down substantially, and yet gold is up a little bit. And that hasn't made you wealthy. But remember, in a deflation, depression, and I know we're in massive inflation, but I think what we are going to witness is perhaps a very, very substantial recession into maybe the greater depression eventually. You'll have a Fed fight it with inflationary policy, of course, but the bottom line is, in the environment we are heading into, he or she who loses least wins. And I need people to understand that you don't buy gold and silver to get wealthy. You own it because it is wealth. And I think there are a lot of people who haven't really grasped that yet. And they're like, hey, if it isn't going to go up now, why would it? And that's something, and that's something that I think is fair, but I also think will have its time. And I think people are just a little bit, they're a little bit disenfranchised, if you will, by the lackluster performance. And I understand that, but be careful what you wish for when gold and silver finally do express themselves. And I really do think they will. It's inevitable. Be careful what you wish for, because that will be at the expense of stocks, bonds, real estate, perhaps even cryptocurrencies as interest rates rise. So
Yeah.
we can get into that, but this is just normal human emotion. I also like to mention that I look back over the last decade, May is our worst month. Every single year, May is the worst month. People are, hope spring eternal. They're getting outside, they're planting their gardens, they're playing golf, if you live up here in the north, of course, I moved to Florida, but I'm back in Minneapolis where I spent 50 years. And look, the minute you get 40 degrees up here in Minnesota, you start, you see people with their windows down and short sleeve shirts. So
Yeah.
by the time you get decent weather in May, no one wants to sit at their computer and think about metals. It'll all come back around. This is just a slow period, and it is what it is. Nothing's changed. That's the bottom line.
Couple of things you mentioned there. I wanted to give some pictures because it jumped right to my mind when you said some of the more recent entrants into those who have been stacking metals might have been thinking they were buying something to flip it for a quick profit. And we have a comment on that very point, and it brought up in my mind some charts that I saw from Egon von Greyerz recently, and I want to show those. Troy Lagalbo says in the chat here, some people's brains are wired backwards, lawful. They see the paper as money and the gold and silver as a type of investment.
Yeah.
So that's backwards. And I wanted to share this. See if you can tell me if you guys can see this.
Yeah.
Okay. So here, this chart put out by Gold of Switzerland, Egon von Greyerz, and the 100 line across the top here says gold is the straight line at 100, constant purchasing power. And then it's about 120 year chart on the bottom that shows all the major currencies of the world and what their purchasing power, all starting out from the 100 as a baseline, what happened to those over the last century and 20 years. And you can see currency after currency after currency has just plunged from 100% purchasing power that it had back in 1900 at the turn of the last century to they're all down in the mud at approximately 2% or less. Some of them have just gone away, like the Deutschmark there in the 1920s, in the Weimar Republic, and so on. And then there's another chart that also drives the same similar point home. Unless you want to comment on this, feel free.
As far as that chart, look, the death of the dollar, the death of money, the death of currency is a slow process, and you can see it takes place without people really noticing. It's one of these deals where it's insidious, and you can look. There was a man named Dr. Franz Pick who said all currencies inherently are meant to die. Every paper currency that ever has been has died, and that's because politicians always choose inflation over austerity, and they will do it this time too. They're talking a big game. But the Fed can't raise rates. They don't want to be responsible for blowing up the economy. They'll raise them enough to create some strain and some pressure and some pain. And as I've talked with you and others over the last year, I really do believe that the weaponizing of the dollar, the pushing the Russians out of SWIFT, the deteriorating relations with Saudi Arabia, look, you have a growing interest in selling, whether it be energy or armaments for other currencies outside the dollar. And then